It's possible for scams and Bitcoin to go hand in hand. Here's how the scams operate and what to look out for. Hi, welcome to Crypto Coach, where we use examples to simplify even the most difficult ideas. Today, we're going to talk about the top crypto scams to avoid. It wasn't the first time we heard of someone finishing their education earlier than expected when one of our students informed us that they planned to leave college in August of 2021. However, the reason was something completely fresh. When this student became a victim of a cryptocurrency scam, they lost all of their money, as well as a bank loan, putting them in debt. To put it mildly, it was a financially and emotionally trying experience to go through. The bad news is that this student is not alone. To date, there are hundreds of millions of people who possess cryptocurrencies, and predictions suggest that number will continue to rapidly expand. Coinciding with an increase in the number of cryptocurrency owners, scam victims have also gone up. We, a team dedicated to behavioral economics and psychology, just put out a book about how fraud, scams, and financial abuse are becoming more common. Scams involving cryptocurrencies are common for a variety of reasons. Also, there are things you can do to lessen your chances of falling victim to fraud. Cons have been around for a very long time. There are even tales that date back to biblical times that discuss them. The ability of fraudsters to easily defraud millions or perhaps billions of people with a push of a button is one of the most significant shifts that has taken place in recent years. Cryptocurrencies have come to represent the cutting edge of these new potential for cybercrime, as the internet and other technologies have simply altered the terms of the game. In the beginning, cypherpunks, or those concerned about privacy, were driving forces behind the development of digital currencies known as cryptocurrencies, which use cryptography to ensure that transactions are private. But they have grown so much that they are now on the minds and in the pockets of both regular people and criminals. This was especially true during the COVID-19 pandemic, when the prices of different cryptocurrencies shot up and they became more popular. Scammers took advantage of their fame to con people out of their money. The pandemic also produced a disturbance in conventional industry, which resulted in an increased reliance on alternatives, such as cryptocurrencies. Cryptocurrency scams cost investors about $14 billion in 2021, according to Chainalysis, a blockchain data portal. For instance, investors in a Bitcoin investing platform were duped out of $3.6 billion in 2021 by two South African brothers. The FBI reported in February 2022 that it had apprehended a couple who had utilized a bogus cryptocurrency website to swindle investors of an additional $3.6 billion. You might be puzzled as to how they managed it. Scams using Bitcoin can be divided into two broad categories, each of which aim on a distinct demographic group. The first one is directed at crypto investors, who are typically high-risk traders with active trading portfolios. Investors under 35 with high salaries, advanced degrees, and careers in engineering, finance, or information technology make up a large majority of this group. In these scams, fraudsters generate bogus coins or fraudulent exchanges. The recent case of Squid, a cryptocurrency coin named after the TV series Squid Game, is instructive in this regard. After the price of the new coin rocketed, its inventors just vanished with the money. An initial coin offering a more ICO form of this fraud involves promising investors substantial and quick profits in exchange for being among the first to buy a new cryptocurrency. Unfortunately, in contrast to the Squid proposition, no coins will ever be produced, and potential investors will go away empty-handed. In point of fact, a significant number of initial coin offers turn out to be hoaxes. But due to the intricate and ever-evolving nature of these new coins and technologies, even well-informed and skilled investors are susceptible to being duped. Anyone thinking about purchasing Bitcoin should follow the time-tested recommendation to conduct extensive research on the offer, as with all complex business endeavors. Do you know who is behind this deal? Are there any details available related to the company? Does a business have a white paper detailing the features of their product that I could read? One red flag in the Squid case was the inability of investors who purchased the coins to sell them. As is common with scam sites, the Squid website contained numerous grammatical problems. In the second most common sort of Bitcoin fraud, scammers utilize cryptocurrency to move money from victims to their own wallets. Anyone, regardless of age or gender, can be a target. Such scams range from ransomware to Ponzi schemes to romance fraud to computer-related sextortion. In order to avoid detection, scammers are taking advantage of the anonymity provided by cryptocurrency. Due to their irreversibility, anonymity, and impossibility to track, wire transfers and gift cards have been popular methods of payment for scammers in the recent past. The use of such payment methods does, however, demand that potential victims leave their houses, where they are more likely to come into contact with a third person who can intercede and potentially stop them. Contrarily, cryptocurrency can be bought whenever and from anywhere. According to a recent report, ransomware victims are being asked for Bitcoin in nearly all of these cases. Cryptocurrency payments are a common sextortion scam demand, according to the UK National Cyber Security Centre. Cryptocurrency is becoming a more common component in romance scams aimed at younger adults. It's a red signal if someone asks you to transfer money to them using cryptocurrencies. Because of the high risk associated in this demographic, more research has been done on financial exploitation of the seniors. Scammers target people who have certain characteristics, according to the findings of recent studies. Intellectual, educational, and behavioral deficits are among them. Young adults, of course, are also at risk and increasingly becoming victims. Young, educated, and well-off investors should be included in education initiatives to ensure that all demographics are educated. New means of security are needed in our opinion, which is why we believe authorities must do more. For instance, present restrictions on financial advice and goods might be expanded to the digital currencies world. Researchers in the field of data science must also improve their abilities to detect and track fraudulent activity. There is virtually little chance of getting your money back from a cryptocurrency scam. For the time being, cryptocurrencies are unregulated. There is no better way to describe them than the Wild West of finance. If you've enjoyed this video, please support our channel by clicking like and subscribe if you haven't already. Thanks for watching, and I hope to see you again soon.